A man once walked through a forest at night carrying a lantern. Halfway through the trail, he noticed a snake coiled beside his path. Terrified, he froze. His heart raced, he backed away slowly and spent the entire night sitting in fear, convinced one wrong step could kill him. But when morning arrived, sunlight revealed the truth. The snake was only a rope. Nothing had changed overnight except one thing. He could finally see clearly. In the moments of fear, the mind stops reacting to reality and starts reacting to perception. And once fear takes control, people often choose emotional safety over rational thinking, even when the danger was never truly there at all. The stock market works the same way. Fear is one of the most powerful forces that decides your faith in the ecosystem of investing. It changes people emotionally. The stock market is not just a battle of analysis, it is a battle against human psychology. You would think that I have done all the research. I won't be getting overwhelmed by this, even during the downturns. But that's not how the human brain operates. Because the human brain was never designed for investing, it was designed for survival. Thousands of years ago, reacting quickly to danger kept humans alive. When uncertainty appeared, our brain learned to prioritize safety over logic, and that ancient survival system still controls us today. Except now, the danger is not a predator in the wild, it's a red screen full of falling numbers and losing money. When markets crash, investors experience something psychologically fascinating. Even though nothing physically threatens them, the brain often reacts as if danger is immediate and real. Their stress rises, and their emotion overrides their rational thinking. The need to escape becomes too overwhelming, and suddenly, the so called well researched long term investors become short term survivors, if they are lucky. This is why fear destroys wealth. And perhaps the most dangerous part in this is that fear spreads and amplifies with time, eerily similar to how compounding works. Us, human beings, are deeply social creatures. In uncertain situations, we instinctively look at the crowd for guidance. So when millions of investors panic simultaneously, fear becomes contagious and predictable. This is proper herd mentality in action, the behavior that forces individuals to leave their conviction to side with so-called perceived safety. The social proof of that everybody is doing it overrides any sense of logic or individualism. The crowd emotionally validates fear. It convinces you to abandon research and ignore fundamentals. The herd mentality creates a loop of fear through an ecosystem of sensationalism. It makes you fearful of pre-existing worries, causing you to be emotionally exhausted. Investing becomes psychologically draining. This roided up fear makes you desperate to have something that is different from the usual information regarding the finances or the market, and this makes you perfectly vulnerable for all sorts of nuisance. Dependence on unreliable finance gurus, overconsumption of sensationalized market content, emotional vulnerability to narratives, and getting trapped in scams and schemes. At the end, it is not about whether being influenced by others is a problem in itself. When the foundation itself is built upon irrationality, then success will be out of reach in every aspect of life, not just only in the stock market. But the introspect of fear is not just psychological, but also philosophical, and the greatest investors in history understood something most people never bothered to. They understood the stock market is less like an economic system and more like a mirror. It's just predictions and possibility. In the end, fear is unavoidable. Every investor feels it. Every investor experiences it. The real difference is whether fear controls decision or merely accompanies them. Because markets do not reward the absence of fear. They reward the ability to remain rational despite it.